Good evening, everyone, and welcome to our webinar. Tonight's webinar is entitled Easy Research Using CoreSSG and SSGPlus. My name is Ann Cuniaz. I am the host this evening. Our presenter is Suzi Artzberger, and she is our Vice President of the Online Stock Tools, Information Technology, and Data here at Better Investing. And in that role, she does lead our team that develops and improves these stock tools. She's a user. She uses these to manage her own investments. I know she uses them a lot right from inside the tool to execute some of her research. So Suzi, I think we should get started and share what you can about easy research right from the tools.
Great. Thank you, and welcome everyone. So before we formally begin, let's go over our standard disclaimer. You will see some stock ideas as we go through our program. Please consider anything you see for demonstration purposes only. Whenever you see a stock in one of our webinars, please research it and ensure you understand what you're investing in before you invest. Securities in the screenshots or the live demo may or may not be currently held in my portfolio. In this case, I do not hold any of the securities we'll be seeing, but I am an active investor, and you never know if you're reviewing this as a recording, what the status might be. Our presentations may contain images of products or services not endorsed by Better Investing. If those images exist, that doesn't imply that they are endorsed by me or Better Investing. Our session is being recorded for future use in case you have to leave or if you want to review it again later. So please tell your friends about it. The recording will be posted in the video learning library and available to members after logging in to the Better Investing member website. Today's session will cover how to use the online stock tools, in particular CoreSSG and SSGPlus, to research a stock. In terms of research, CoreSSG and SSGPlus are very, very similar in the research links that they offer and the information within the tool. I will point out the difference as we go, but we will be using SSGPlus to perform a quick stock selection guide. We will explore various links and sites in support of completing that SSG. There will be some forecasts being made by me, and I'm not going to spend a lot of time on where I came up with those. You'll see some of the research that I do to come up with those. But we'll, in general, show you the research within the tool and the research links that are applicable at each SSG step. So at the end, we'll have a completed SSG and what I call kind of a quick and dirty SSG, but a little bit more than what I would do as a quick and dirty SSG. And then finally, we'll answer some questions along the way. So please enter them in the question panel or chat panel on GoToWebinar's control panel, and then we'll cover them at some breakpoints where I'll ask Ann, and then again at the very end. So let's look at what I consider the key research areas. First, and actually pretty darn important, is finding a company to study. The database covers over 8,000 securities from about 5,500 trading on U.S. exchanges with the balance trading on Canadian exchanges. You don't have time to go through all that. So you want to screen out some better ones. Now, we just had a webinar in July called Screening in Stock Ideas from the Better Investing website. And so I'm going to encourage you to take a look at that if you're saying to yourself, yeah, I wish I had some better ideas or something. You can find those in the screening tab of the online tools, potentially the ticker heat map, the first cut stock reports, or even other ideas on the website. And again, all laid out in that webinar from July. So then,
Susie, I'm going to interrupt here because we just ran that screening in Stack Ideas in October,
oh, I'm sorry.
a few weeks ago.
I'm
So
sorry. It's
I just
October.
wanted to make sure people know which one to look
Yeah.
for.
Thank you
Yeah,
for that correction. I have no idea
right.
why I wrote July.
I
Apparently,
don't know
all
either.
webinars were happening in
We
July.
were working on portfolios in
Right.
July, but that one's there. But yeah, okay.
October. Thank you.
Carry on.
No, I appreciate the correction there. October webinar. We just held it. Um, and we're also going to be taking a look at, I'm going to skip down a few lines, the fundamental data. Peer research, where we can go to find peers, how to look at peer data within the tool itself. The company profile, meaning what does the company do? What is it all about? That's included within the tool, showing you how to easily get to the company website. I'm going to show you a little bit about how to research using the SEC filings in the 10K. We need to look at growth drivers. So going along with company profile, we need to look out pretty much at those same resources and determine what's going to drive growth for this company. We're going to take a look at estimates, some from within the tool, some from Yahoo, Morningstar, Zacks, Seeking Alpha, and so forth, and then take a look on the valuation side, what we have with the integrated data, which is 10 years and a chart, and some with big charts. So those are the areas we're going to be covering. What we're not going to be covering are paid research sites. So I'll say right now, if you love your value line report, feel free. But if your company isn't covered by Value Line, we have some pretty powerful information for you where you can work without it. Now, for me, going out to a paid research site requires leaving the tool, logging in, trying to find what I want, and so forth. So for my quick and dirty studies, 90% of the time I'm working exclusively within the tool and what we have to offer in these key research areas. Before we start going through SSG Plus and doing our quick SSG and using research, I'm going to give you a very basic overview on the parts of the SSG. You'll know that you're in the right spot if on the left-hand side in the panel here, there's a green SSG with white text, and that means you're in the SSG Plus. There's also a logo in the upper left. Up at the top is the navigation. We're primarily going to be working in the first two steps of analyzing growth and quality and valuation and return. We will also hit a little bit of ratios, which are exclusive to SSG Plus, a little bit of audit, and a little bit more of member sentiment. Up on the right-hand side at the top, there are menu items. So we're going to be talking about research quite a bit and the research links from there. In the center of your screen, the biggest area is this graphical display of data. Below that is a table of data or tabular display of data. It's basically a table of the same data you see up here, but sometimes there's a little bit of information that we'll show you. That's extra. There's recent quarterly figures here on the right. The legend here for the graphical display is in the lower right corner. And importantly, there's a button here for peers because that's a really powerful part of the research is how does my company compare to peers because we want to buy the best. And finally, there is a green box here on the same row as sales, and another one that is on the same row is historical EPS. And green boxes in SSG Plus indicate everywhere that you should make an entry, which means a judgment or a forecast. So that's, and then we will talk about the valuation return and what that layout is when we get to that page. So I mentioned in this upper right, there are some menu items and one is research. So I've blown that up here. If you click on research, it'll drop down a number of different topics. and you can see them highlighted in yellow here. If you click on one of those topics, to the right, you will see the related links that go along with that topic. So for example, if I clicked on analyst estimates, flying out to the right would be all of the research links for analyst estimates. And they're basically, as is all of the research links, sites that you can access for free that give you some meaningful information. Now, some of these, and I'm going to point out Seeking Alpha here, you can access some information, but you might need to log in. It's still free, but you sometimes on some of these sites, you'll need to create an account and log in. So there's a caveat there. Now, one thing we'd like you to do as you go through creating your stock selection guide is to make notes. I don't particularly care where you make the notes. Ideally, it's someplace you can find them again, like an Excel spreadsheet, a Word document. But we also provide a place right within the tool to create notes. And in both CoreSSG and SSGPlus, it is the last tab or block on the end of the navigation row, and it's called Notes. There's also a little number next to it indicating how many notes there are for this company. Now, these are not notes that are all of your notes for all companies. If you enter a note, it goes along with the study that you've created. So in this visual example here, I'm looking at FactSet research study, and there's one note, and it will always go along with my FactSet research study. If I made a note within here about Apple, it would kind of be misfiled, if you will. It would stay there, but you should make notes about the company under study, in this case, FactSet, under the notes for FactSet. So when you click on the notes feature, up comes a list of your notes and importantly, a blue button that says New Note. So that's where you create a new note, and then you would fill out the information and click Save. But if you clicked on an existing note, you can edit, update it, or delete it. So if I clicked on that, I can bring it up and then update the note right in the center section here. I can update the subject line as well. And then when I'm done updating, I can click Save. If I want to delete that particular note because it's no longer relevant or it's too old, something like that, I can certainly do that by clicking on Delete Note. Now, if I want to print these out to show my club, for example, I can print notes. And to do that, I would go up to the menu item that says Print, click on that. It would bring up the Print Reports pop-up here, as you see here. And I would click on and check the box for notes and say, most likely, print all the notes. However, sometimes we have community notes, and they are from other people. And if in general you don't find them relevant to you, you can say, just print my study notes. And if you happen to share one as a community note, it would be my community notes also. So choose this second option if you don't want community notes to show up. And then you would click the blue button to generate the PDF. And then it would become, the notes will print up as part of your study. Okay, so that's the basics, the research steps, the notes, and just using the data within the tool. So we're going to go live to SSG Plus in 1 second, but I want to point out the handouts. The handouts have a series of notes at each step, and that's actually what I'm going to be referring to as we go through our presentation. We're going to skip all the text here and just do it live, but if you want to follow along, get that handout and follow along. Before we go live, Ann, do we have any questions?
Yes, Susie, there are a couple questions regarding the notes feature that you just
Okay.
reviewed. First, and I think you kind of answered this in the second part of your chat, but could you clarify if the notes, your personal, my study notes,
Mm-hmm.
the ones that you
Mm-hmm.
assigned to your study, do those get shared?
They do not. Great question. By default, when you open up and create a new note, the sharing function says no sharing, none. It's my study note. You must click a different radio button to share it as a community note, and that means other people can see it if they are studying the same company for FactSet, let's say. Share it as a community note if you have something to say. We encourage that, but by default, they are not shared.
Okay. And then another one, I think you said this too, but just to clarify again, do the notes that you are making, those apply to a specific company, or I'll even add a specific stock study that you are
Correct.
working on?
They do. Let me go
That was a
backwards a few
question. I'll
slides.
let you say yes.
Yes, yes, they do. So in this screenshot, the green button for notes is highlighted, indicating that's the one we were on, and this is what we see. And we can see that I'm studying in this pretend example, FactSet, and I've given it a study name. So that study note will only show up if I reopen this study. If I have another FactSet study, I won't see it because it's linked to the exact study I'm working on, if that answers the question.
Perfect.
Yes.
I think that makes it very clear. And that's all we have for right now. Thank
Okay,
you.
I'm going to skip ahead and um, let's say we hit printing with notes. We're going to go live to SSG Plus. All right, got to shuffle some papers here, and then I am going to show you. I've got my browser called up. Any modern browser will do, meaning Safari, Firefox, Edge, Chrome, for example. And I am on the Better Investing website. I can tell that. I have a logo in the left. I'm at www.betterinvesting.org, and I am already logged in. So it says my name. I know I'm logged in. And in this home page of the website, on the upper right-hand corner, it says Online Tools. And I'm going to launch an SSG. And I'm going to enter my ticker here. And the ticker we're going to study tonight very quickly. Remember, not going to go in great detail about how I formulated my judgments, but we're going to be looking at FIX, or Comfort Systems USA. So I'm going to click on that. I'm going to click Go. In another tab, my SSG Plus will open. If your screen does not look like this, you might be in CoreSSG. So I'm going to note something here. There's audit, sentiment notes, there's basic navigation, and then we see audit, sentiment, and notes. If I go to CoreSSG, I've got the same menu in the upper right, and at the last three after the main navigation are audit, sentiment, and notes. So very, very similar. The difference between CoreSSG and SSG Plus is the presentation of the stock selection guide data. So CoreSSG has more steps, and it's a step-by-step process. SSG Plus is really baked into two views: analyze growth and quality, and valuation and return. So we're going to be working in SSG Plus. So I've picked a company. How did I figure out this company? Well, I'm going to go back to what I said before is we have a screening webinar that you should check out. And this company came from one of our predefined screens called the A-List stock screen. And well, what is it? We know the ticker is FIX. We know it's called Comfort Systems USA. I'm going to mouse over. This is one of our first pieces of research. Tell me a little bit about the company. Tells me the last current price, which in a vacuum, if this is the first time you've seen the company, is just merely interesting. But because you don't know what that means, if it's gone up or down lately, so it's just the current price. The last fiscal year end, their fiscal year ends in December. So when I look at the graph, and I'll point that out in a second, and they have 3 quarters showing, that means the last quarter would have ended in September. They are in the engineering and construction industry, in this industrial sector. So remember engineering and construction. We'll come back to that in a minute. The company size, is medium, meaning they have between 1 billion and 10 billion in sales in the last fiscal year. Their Morningstar financial health grade is a B, and that is a ranking amongst the Morningstar's proprietary algorithm for their financial health. But the real important thing here is, what do they do? Give us some sentences. They provide mechanical contracting services, which means heating, ventilation, air conditioning, or HVAC. They do plumbing. They do electrical components. The projects that they do are mainly for commercial, industrial, and institutional, and tend to be geared more towards mechanical or HVAC. Revenue is roughly split between installation services and maintenance services. So they continue to maintain the things that they build. And they work throughout the United States. They operate in two segments, mechanical and electrical, with the majority being from the mechanical services segment. Great. That gives us a whole bunch to work with right from the start. So related to construction, I want to point out, though, that this is not mom and pop HVAC from down the street. Their revenue in the last year is 5.2 billion with a B dollars. So this is a whole different scale, and we have to adjust our mind to that. So, putting some of these thoughts in your head is you doing the research. Now, first thing on our list is to do some visual analysis, which can tell us, we're going to work up to, is this company worth our time to dig into it further and figure out what our judgments are going to be, because that takes a little more time. So this front part is pretty formulaic, is that we're going to go through, and then we're going to get to some deeper research. So first off, I am going to uncheck the pre-tax profit pink or fuchsia line, and we see that go away on our graph. And we're going to take a look at our sales line in green. It's going up, which is great. That's what we want. Our blue line are earnings. Number one, it has earnings. Number two, it's going up. And number three, it's pretty consistent. There are a few dips in 21 and 17, but it's pretty consistent. If I wanted to put numbers to that data, I could look down here in the tabular data, and on the line that says historical sales, we have growth rates of 15.1% and historical earnings growth of about 30%. And we can see that in that the blue line is rising at a higher rate than the green line. That's all of that is copacetic, and the graphical data represents what the tabular data shows down here. What I do see also is that we have 3 open circles for both sales and earnings. Open circles are the reported quarters. The dark circle is, or colored in circle, is for the last fiscal year. So for 2023, remember they report in December. So this would represent December of 2023, and then March, June, and September. So I believe they reported the end of October, their third quarter, the end of October. What can we tell about that? Visually, they're going up. They're relatively straight and in line with the previous data. We can look over here in our recent quarterly figures and see, yes, that quarter ending date is September 2024. Again, another piece of data for us. Data is research. And we can see for sales that quarter over quarter, so last quarter versus a year ago, third quarter, the sales rose 31%. So that seems to be accelerating over their traditional 15.1%. Earnings per share rose 39.6%. So we have that data on screen also. We also have our price bars, which are in black. And just by looking at them, we can see that they are generally following sales and earnings. But we see in the latter years that particularly 22, 23, 22, 23, and then this last one, that they are rising at a little bit higher rate. This last bar represents the 52-week high and low, and we're pretty close to the end of 2024. So this is generally, at this stage of the game, this is generally going to represent, it might go higher, but generally going to represent what 2024 looks like. When the black lines move away from the blue line, move away and up farther from the earnings per share line, that means your PE is going up. So just visually, I can see, oh, I could be expecting higher PEs in the historical data. Okay, now that's all well and good. We see lines going up. We see a medium-sized company. We see quarter numbers that look good. Let's compare to peers. And to do that, we're going to look at this blue button that says Compare Peers. And by default, there are 3 peers already chosen. Well, I'm going to cut to the chase and say, I don't know any of these companies. I can open another tab and look at them. So why don't I do that? I'm going to go back to my member homepage and look at Sterling Infrastructure, and it will open in another tab, and I'm going to look at what it is. Civil construction company that specializes in heavy civil infrastructure and infrastructure rehab. They're not really HVAC projects or electrical or plumbing. Not quite the same thing. What's one of my other options here? Ameresco or Top Build? Okay, AMRC, BLD. I don't know anything about them. I could look them up through one of our portfolio summary, and I'm sorry, one of our summary pages. I'll get to that in a second. But I'm going to do it this way. Ameresco, Energy Efficiency Solutions for Facilities. Not really HVAC, mechanical, or electrical either. So yes, they're in the same construction industry. And that is a feature. Each one of these is chosen because they are of the same size from the same industry. How do we pick from all the other companies that might be medium-sized companies in that same industry? They are ranked by earnings per share growth rate. Okay, last company, BLD. Let's see what they look like. BLD. So here I'm using my own tool in a different tab to do more research to pick the right peers. And what I'm deciding is I don't love them. Top Build is an installer and distributor of insulation. So not really. So where can we go to find a more compatible set of peers that are doing almost the same thing? Now, if you can't find somebody doing almost the same thing, the industry is probably close enough, but I know for a fact, I'm going to give it a go, and I know for a fact, because I've already been through it, that we have some better options. How did I find those options? How do we find those options? I'm going to go to research and company summaries, and the first one I'm going to look at is Yahoo Finance summary for Comfort Systems. It opens in a different tab, and here we end up on the Yahoo page, and you'll note that it goes directly to the company under study that I'm studying. I don't have to fumble around with entering the ticker symbol or anything. I'm going to scroll down, and Yahoo has two sections here. One is called, whoops, let me scroll down. People also watch. I pay less attention to this. And then they have one called similar to fix. And I'm going to note Sterling Infrastructure was one of them. Remember, they were the civil engineering company. MCore, IES Holdings, Quanta, and Mastech. So I write those down, or I make a note. Now I'm going to try one more place. You can look at other company summaries, but my next favorite one is the Morningstar summary. So in the tool, Morningstar didn't come up with those peers. That's an algorithm Better Investing built. So let's see what Morningstar says for peers. And what they have is a section that they call comparables. And if you scroll down some more on their summary page, you will see a longer list of engineering and construction industry comparables. And you know what? I see some of the same names: Quanta, MCore, Mastech. So let's try some of those. Now, what do they do? Well, whoops, I'm going to go to quick navigation, and I did this before. I probably didn't explain it well enough. If I click on quick navigation, I can enter PWR for Quanta, and then take a look at what they do. Specialty contracting, delivering infrastructure solutions for electric and gas utility, pipeline energy. Well, maybe a little bit closer. Quanta. Then the other one, I'm going to click on quick navigation, was MCore, EME. What do they do? Specialty contractor, electrical and mechanical construction and facility service. Bingo, bango. They sound very, very similar to Fix. So I'm going to close out my little sandbox here of where I was looking up company descriptions. And I'm going to go back to my Fix study, which is up here at the top in this tab that shows the name of the company I'm studying. And I'm going to go down to compare peers and remove, I'm just going to remove Sterling Infrastructure by erasing it and put in EME. If I don't know the name of the company, I can start, or I'm sorry, the ticker symbol, I can start typing the name, MCore, put that in there. To erase it, you click into the cell, and I can backspace, or I can use my cursor and highlight the whole thing and delete it. But now I'm going to put in Quanta, and the ticker symbol there is power. Do you need to have 3 peers? You do not. So I'm going to only have 2 peers here. Then I'm going to click Update Study. Now, this prevents some powerful research here, because now we've put some thought into this. We have some selected peers, and they will be saved with the study. So I'm going to back out for 1 second and save my study. I'm going to click Study Not Saved, and it's going to say, okay, let's save it. By default, it's the ticker symbol and the date, and I'm going to put in Easy Research and my name and click on Save. And that's what appears there. Now, anytime I pull this study up again, the peers will be as I've chosen them. The only exception is going to be if one of these stops trading, it will be automatically removed. If it changes its ticker symbol, the ticker symbol will automatically change. But so everything stays where I left it. Now let's get back to sales and earnings. So let's take a look at how historical sales compares and growth rates compare to peers. So I'm going to bring up these two other companies and see that they are larger companies and see what their growth rates are. So Quanta has the largest sales, but that doesn't mean they are the best. Let's look at growth rates. Comfort Systems growth rates over that time period is 15%. MCOR's is 7%. Quanta is 11%. Again, pretty powerful because we want to buy the best in the industry. What is the industry average? Well, we have that too, baked right into the tool. The industry average is about flat, negative 0.9%. And industry averages are all companies in the same industry. Now, I get a lot of people confused by peer group average. These are all companies of the same size in that industry. It is not these three companies that you see here on the screen. So the peer group average is 4.2%, and I think Fix is looking pretty good as the lead with the sales growth rates. Let's take a look at earnings per share growth rates. So now we start picking up speed here as we look at these various data and on the peer compare peers graph. So earnings, we see as far as growth rates about 30%. We saw that on the front side for Comfort Systems, but 16% or 17% for MCOR. Quanta is about 20%. So Comfort Systems is stacking up really well. I'm pleased, and I'm going to continue on. The industry average is only 6.2%, so they're doing better than the industry average. So at this point, let's take a step back and finish our visual analysis. Are these lines up and straight? Well, they're relatively straight. Are they up? Definitely yes. Are they parallel? Are they tracking each other? Yes, they are. I'm satisfied. Do we have sufficient growth? Well, for a medium-sized company, we're looking for growth rates, and Ann can correct me if I get this wrong, but I'm pretty sure I'm correct. And then we're looking for someplace at least between 7 and 12%. And we have numbers that are in excess of those numbers, so we're looking pretty good. Let's move on to evaluate management. And again, this is historical data. It's all there for you. We can look at the data by year, for example, for pre-tax profit and sales. We've highlighted the last 5 years and averaged the last 5 years. And in each of these cases, pre-tax profit on sales is looking good, better than the average. The last year is better than the average. And it's a little mini graph here is showing green, and it's up and it's good. Return on equity. We can see over time, return on equity has been growing, and the last year is better than the 5-year average, and things are looking up and they're growing. The trend is up, just what we want. That's a different animal. We want the trend to be even or down, and we would love it to be less than 33%. Sometimes that's industry dependent, but we're going to start with, hey, are we under 33%, something like that? Yes. And in this case, we're around 35% in 2019, slowly been going down. And last full fiscal year, the debt to capital was 16.7%. And the green graph reflects that the trend is down, and the color reflects that this is the situation that we want. It's green. Green means good. So we've got all of that interpreted for us on screen as well. Now, you may also want, if you're an SSG Plus, to take a look at, actually, before we go to something extra here, I mentioned that some of these factors are better if we compare them to peers in the industry average. And those two are pre-tax profit on sales. We should check against its peers and industry average, and debt to capital. So let's do that. We have our peers already picked. We're going to click on compare peers again and take a look at pre-tax profit on sales. And what we're looking for, does Fix beat its peers in terms of pre-tax profit on profit margins? So yes, slightly it does. And we see MCOR inching its way up there, and they're very close. But again, Fix shows pretty well. If we look at the industry average is way down here around 4%. And we see Fix up here, Comfort Systems up here in 7.5%. Okay, let's take a look at debt to capital. Debt to capital, we're looking for lower numbers or better numbers. And we see MCOR being a little bit lower in terms of their debt to capital, but we see a downward trend in the black line for Comfort Systems. And so that's looking good. And I do want to point out, if you're sitting there saying, well, MCOR doesn't look so bad, this is a beautiful feature of comparing peers in the tool, is you might find another company that's also worth your consideration, or they both look strong, and you do a stock comparison guide and kind of stack them up on a data-based quantitative method and see which one makes better sense to invest in. But regardless, I'm going to come away with this saying Fix still, or Comfort Systems, still looks like it's a worthy investment of my time. It's because I'm going to have to put more time in to make my forecasts. So before we move on to forecasting, Ann, do we have any questions?
Not at this point, Susie. Our back room, who is Roy Chastain and Carol Fine, are helping us out, and everybody's been keeping up nicely with the questions coming in.
Okay, perfect. So when we look at forecasting sales, because we want to fill in this green box, we have some reference points that we can look at. But first, we want to review what the company does. And we looked at a couple of company summaries here that basically tell what the company does. I think Google is another one, and its company summary comes from Wikipedia. Yeah. Let me blow that up a little bit so you can see it a little better. On Google Finance website, they do give a company summary, and it comes from Wikipedia. You may want it short. You might want to scan through that as well. One of the ones that I like the best, there's actually two that I like the best for what does the company do to make money. And one of them is to go to the company website. So all we have to go on right now is what we've read. If we're coming into this cold, I mean, all we have is what we have provided in the tool, maybe what we've read through these company summaries, research. Where else can we research? Company website is a great idea. And I'm going to click on the company website button, and we're going to see all about Comfort Systems. And one thing I want to point out, I wanted to make sure that everyone understood that this was not home-based HVAC. These guys are big. They give a little about us segment. They have 45 operating companies and over 170 locations. I think they tell on this page. I'm not sure that they do where I was reading it. They have over 15,000 employees, so they're big. we're going to look for the investors link or investor relations. Happily for this company, it's right up at the top, but I will point out that in other companies, if you go down to the bottom, oftentimes you'll find investor relations or investor information down at the bottom. But we're going to take a look at what they have in their investors section here. And they have a corporate profile. They have presentations. Lots of times investor presentations can help us out. So here's an investor presentation that's very current. We can click through on that and see just what Comfort Systems has to tell us about their business. So 18,000 employees, 6 billion yearly revenue now, given their last quarter. History of profitable growth. You can see their national footprint and so on. You can see what markets they're in. And so I'm a little bit interesting in that they're building out data centers and chip manufacturing. They're providing systems to those companies, to life sciences, pharmaceuticals, and so on. So these are worth a read, and they're accessed directly from the tool. They break down the segment. In terms of revenue, mechanical or HVAC is the bulk of what they do. They do have some electrical and even a little bit less plumbing. So read through those. Now, another favorite place of mine is to research from the 10K. Now, how do we get to the 10K easily? We're going to click on the research link. We'll go down to filings and transcripts, and then the flyout button here, we see the SEC Edgar filings for 10Ks. 10Ks are annual reports, and they can give us a wealth of information. There are certain sections in your 10K official filing that I'm going to point you to, and I'm going to make it a little bit easy here. So the 10K, by going this route, the filing type is automatically filtered for 10K on the Edgar website that we're on here. The top one is sorted, and I can see the filing date was February of 2024. I'm going to click on Documents. And the way I do it is I'm going to click on the biggest size document and make that easy. What you'll see sometimes is that it is tagged up with these little orange lines. You're just going to have to ignore those. But what I'm looking for in terms of research is I'm going to go down here and learn about item 1, the business. I'm also going to point you to risk factors. Management discussions of analysis of financial condition and results of operations are also another great section. But in the business section, you'll learn more about the company, and you don't have to read the whole 10K. Go to item 1 and they'll tell you about the business. Next. So I'm not going to read it for you, but this is my process. The other thing I would do is go to Research, Filings and Transcripts, and look at at least the last call transcript so I can get a sense of what the company is saying in their last earnings call. I'll get a sense for what the analysts are concerned about, and I'll get a sense for margins, perhaps changes in margins, changes in the business or economic conditions that they might be concerned about. Seeking Alpha does a very good job. You might have to be logged in here, and you might only get the very latest one, but that should be good enough to learn more about the company. From the going back to the investor relations website, you can actually ask them for more printed material. You can usually get access to the conference call from their site in case you wanted to listen to it. So a wealth of resources there, but I'm a big fan of reading transcripts and looking at presentations there. So By now, we've done a little reading. We know more about Comfort Systems and what they do, and we want to do some forecasting of sales. Now, the company may have guidance in their report. In this case, Comfort Systems does not provide guidance. They provide recent financial results, capital allocation, but they do not provide any guidance in their investor presentation. In their transcript, they provide a minimal amount of guidance. So we're going to use what we have at hand to come up with some sales and earnings forecasts. Now for sales, we have history. We have 15% of history. If we want to take this last year out by clicking on the x-axis, because it's a little bit of an anomaly, that's fine. It was 10 years ago. It's fine to take that 1 year out. We get a little bit straighter line here. We see our numbers go up quite a bit. I'm sorry, they don't go up quite a bit. They go up a little bit. So we've got historical growth rates of 16%. Keep that in your head. Sales recent quarter growth rates of 31.5%. Now I'm going to turn on the sales detailed estimates and earnings per share detailed estimates to see what those look like as reference points. I note that, and the way we can use those, we can get a sense for, by drawing our growth rate line here, that those might be something like 8.7. So we got a pretty wide range, 16, 31, 8.7. We have the 2-year sales estimate of 20. So we'll keep 16, 20, 31. Keep that in mind. And then we can go to external sources. Under research and analyst estimates, the first place I go, just because I've known it so long, and I know they have both revenue and earnings estimates, is Yahoo. And what we're going to do is we land right on the analysis page, which is where the estimates are. I'm going to scroll down one section and see revenue estimates here. And look and see that 32% for the current year is what they're projecting, but next year is way down. So our 2-year estimate is about that 20%, or you can actually just average this. So 42, 21% would be the Yahoo number here. So 21% from Yahoo. And then I'm going to show you one more area that you can go. So I usually develop my quick and dirty estimates here by looking at these things. We got 2 analyst estimates from outside the community, which are 20 and about 21%, a 31%, which we will probably come down in or not be able to be held up into next year, 16% historically. So I'm going to go with something that's closer to historical and say maybe not 16, but I'll go 18%. Split the difference here. Now, do we have a 5-year estimate? We do not in the tools, but sometimes we'll see these numbers go out one more dot. Now, what this is telling us is that I might be too aggressive in that, yeah, it might be 20% out, farther out, but it looks like the growth is going to slow down a little bit. So I might just go back and change this to 16%. And this is where, as you do more of your more SSGs, you'll feel more comfortable doing that. Now, earnings per share growth rate, same thing. I've got 26%, 39% that they've done recently. We see a moderation of values from the short-term estimates here. So take that into account. And then let's go out to Yahoo. You can use any one of these or multiple. And I'm going to go all the way to the bottom to get Yahoo's long-term estimates. Now, Yahoo estimates are provided by Refinitiv, which is also a very good source. Next, they don't actually give me next 5 years. They give me current year and next year for earnings growth estimates of 20%. So 20% on earnings, they've recently done 40%. I'm so sorry, I don't know why this is. And then historically 26%. With SSG Plus, you have one more bit of help here. You've got basically a panel for calculating with the preferred procedure. If you don't know what the preferred procedure is, I would suggest that you learn. We have videos in the video learning library because it can help in this situation where you feel, I want to do a quantitative analysis of what the earnings could be. So I'm going to start with 16%. I'm going to back out my pre-tax profit margins, which have been rising. And so I'm going to put something a little closer to what they've been recently. I'm going to back out taxes, which have also been rising, and put something closer to what they've been recently. And then take a look at my shares outstanding, which have been very steady, so I am not going to change those. And I might come up with a number like 13%. So I'm actually going to make this 14% because they might grow their margins a little bit more, which will give them more earnings. But this preferred procedure is a terrific way to show, what you can do with, some data that's already in the tool, research that's already been done for you, and a helper calculation for your study. So it's 16 and 14%. Now I'm going to show you a trick. It's not a trick, it's data. And show you sentiment. This is member sentiment, and this is what other people have been saying about this company. And it will take anonymized judgments from other people. And again, this is data, this is research, what other people have said, and give you the mean or the median. If you don't know the difference, you can click on this blue arrow, or not, I'm sorry, blue question mark. And other people in the community, how many? 120 studies have been done. Actually 168, but we've removed 48 as outliers in the last 90 days. And based on 120 data points, the median number is 15 for sales and 15 for earnings. So I use this, I don't go right here and pump these numbers in. I use them as a double check. And I feel my numbers, given the research that I had access to right from the tool, are so close to 15 and 15 that I'm pretty happy. So using that as a double check. All right, so we've got 2 of our 4 judgments, or potentially 5 judgments, and we've got sales forecasts and earnings forecast complete. Before we move on to valuation metrics, Ann, do we have any questions?
Gotta unmute. I've done this before. So you were talking about the detailed estimates. I don't think you talked about where those come from. Could you just give a little bit of
Sure.
background on those detailed estimates for sales and earnings?
Yeah, these are called detailed estimates, and they come from Morningstar. Under data and detailed estimates, you can see that there are sales and earnings estimates, both for the end of the fiscal year and then the next year and even the following year by default. we put what we have from Morningstar in there. You can overwrite them if you have a different source, like a value line or a CFRA or something like that, some other source. And that's where they come from.
Okay,
And they're
great.
plotted on the graph.
I don't know. I don't think you did cover this. Kathy's asking if you would take just a moment to show how to use Yahoo for the revenue estimates, the
Sure.
sales estimates.
Sure. I'm going to go to Research Estimates, Analyst Estimates, and go to Yahoo. Click on that. I'm going to land on the Yahoo page for analysis. And as I scroll down, I see two sections, one for earnings estimates, and the second table here is for revenue estimates. And in percentage wise, there's the current quarter estimate, next quarter estimate, but we're looking for years out. So what it said, I looked at this number here, 32.77, and that is for the end of this fiscal year. And then next year, for the full year, it's only expected, the estimate is, let's just put it like that, 10.64. So I picked up on these two numbers and noted two things. One, higher growth rates through the end of this year, growth rates that are almost a third of what they had been in the past, projected forward. So you need to take that into account. And then if I just average these two together, it comes out to be about 21%,
Yep.
which I went under.
Right. Okay, right. Thank you. I think that's it for now.
Okay.
I'm going to move you along.
Yes, now we're going to go to valuation return. And this is where we try and find out if the company is trading at a reasonable price. And we want to buy it at a reasonable price, not an inflated price. So the primary way we do that is by looking at PE ratios. And if you've done our intro series, Introduction to the SSG, you'll know all about how we use PE ratios. But I want to point out that we not only have 5 years of prices, earnings, and PE ratios and dividends and so forth that we have. Click on this radio button and you can see 10 years of those values. I mentioned dividends. This company does pay a dividend, so that's another piece of information for us. And we see how the dividends have been growing year after year. And what the current dividend is if you bought it if you bought it tomorrow, you'd get $1.40 per year per share in dividends. So we need to look for those green boxes that we need to enter, and we have two. There's actually a third down at the bottom. So we have 3 more judgments to go pretty quickly. And the research that we can do here is much the same as we've done before. We can review our historical data to see, the 10-year average is 23, the 5-year average is 20.4 for a high PE. Right now it's trading what seems to be much higher than that. And again, you can confirm this with the data that's right in the study by going back to Analyze Growth and Quality. And this little red crossbar on the 52-week high and low is up near the top, meaning it's trading almost near the top of its 52-week range. You can also see that up here where there's more data, where it's trading at 446, and in context, that's pretty near its 52-week high. So again, that's a piece of data. But we're looking primarily at PEs right now, and we need to pick a high PE and a low PE so we can generate high and low prices. So we've got our data we can choose, excuse me, and if I went with the 10-year average, it would be something like a 23 and a 13. We can look at the PE chart and see that it was higher in the past, but it's not completely flat, but it seems to be a little bit stable here around those 5-year numbers, which are a little bit lower. So maybe I'd moderate my numbers down to 21 and 12. That's just me. You might choose different numbers. And then we can also see what peers are trading at. So we're looking at high PEs for our peers. And in the last year, Comfort Systems, MCore has been about 17. Wow, Quanta Services has been much higher. And the industry has been about 15. So our company seems to be valued more than the industry average in the last year, if that's important to you. Sometimes we like to see, if PE ranges or if PE movement is impacting all the companies in the same way. I'm not seeing that in this set of data. I'm seeing across the board Quanta is valued a little higher by PE, MCore's lower, and Comfort Systems seems to be in the middle, at least in the last year of data. So I am not going to do much with that piece of data, but with other companies it might be important. And I'm going to base my projections on historical data. And I think I said 21 and maybe 11 or 12. For my low PE, I use this top selection 99% of the time. So if I put 11 in here and I get a number of 143.8, that's way under what the current price is. But remember, our current price is up at its peak. Maybe I'd be more inclined to do 12, but I wouldn't really move too much because it's 156 is well within the range that has been happening the last couple of years. So I'm going to update my study. And at this point, it comes out a sell. Why does it come out a sell? Because it's such a high price right now. But we can see that it was a time during the last 52 weeks that it was much, much lower. Okay. Our last judgment here, we're going to use our internal research and look at the payout. So over time, what I can see as I scan down numbers, the company has been paying out less as a percentage of earnings. This is how payout is, what percent, the dividend is what percent of earnings. And the 5-year average is 10.6. So I'm going to pay actually a little more attention to that because the numbers were much higher back in the day. And our current payout, which is $1.40 out of $13.07 that they earned, equals about 10.7. So this doesn't make a terribly big difference in your judgment. I'm sorry, in the total return that is going to come back, but I can make this 10.7 if I wish. I'm not sure that it's worth getting that fine-grained. 11% might work or even 10% might work. It's really not going to make that big of a difference in your total return. So there I am, quick and dirty SSG with a fair amount of research available to me without leaving the tools or going into paid research. Now, of course, you can do that. One last thing, let's check member sentiment for what my high PE and low PE. I picked 21. Oh, look, that's the median. And I picked 12 for low PE, and the median is 11.6. Payout 10.6. Most people don't change this number. Some people do. And overall, the median total return is 5.2% based on all of the median numbers that were pumped in here. So that is how you can utilize just all of the cool things in this research, in these research links to run your SSG. Perhaps when you have a company that is smaller or doesn't have a lot of coverage in other newsletters and so forth. So Anne, with that, do we have any final questions?
Just one quick one. Do you consider the current trailing 12 months PE when you are looking at either your high or low PE?
I do, but this case, I wouldn't, so we're talking about Suzi's judgment right now, which in this case, what I noted was that it's so much different than the other values. And I know why, because even though the company has done a good job at their earnings, it's trading near the top of its 52-week range. And so that PE is much higher. So I, in this case, didn't do that. I know,
Right. You look at it,
I
but you
look at
don't
it,
let
but
it
in this case, I didn't let it
force your hand.
right. I didn't let it impact too much, particularly because 36 is high, and we know we have we have estimates that say their numbers might be coming down next year from
Gotcha.
a couple other sites that we looked at. So I would expect the PEs to come back down a little bit with that.
And I'll just add one thing that I always tell my students when I teach something similar is that your forecasted high PE and your low PE, I said that wrong. The current PE does not have to fall between your forecasted high PE and the
Oh, not
forecasted
at
low
all.
PE,
Not at all.
which it does not. It clearly does not in this case.
Right.
But don't say, oh, I've got to make that fit because the current, that must be right. You do your own research and make your own decisions.
Right.
But carry on.
Yes. I'm going to go back to my presentation and go to the fact that after just dealing with 1 hour and within the research tools that I have, we have a completed SSG. You guys have the notes of all the various areas that I chose to look in putting this together. So I encourage you to look at those and just look at, is there any other final questions? I would encourage, actually before we get there, I would encourage you to fill out the survey at the end of the webinar before. But anyway, any last questions?
No, but I'm going to share Kenneth's comment because it's true. He's thanking you for a very wonderful presentation, of course. And he goes on to say he just did not know how powerful SSG Plus is until this presentation.
Yeah, there's a lot going on. And
Yep.
There's an SSG Plus presentation or tutorial that also hits a couple of other different highlights. And yeah, there's a whole slew of information on that. But I do want to point out, if you want more information about stock selection guide methodology and forecasting, we have a lot to offer you. The intro to the SSG series, the adding judgment, a mentor from your local chapter. Conventions are a great place to form relationships, network, and ask questions in person. Better Investing magazine always has articles. In terms of the tools, we have managing studies and portfolios to how to work with your studies and do portfolio reports. There is a great class about research and your SSG where you do go off into, right, Ann, you're off into some other newsletters and things.
Yeah. We look at some of the premium resources, the
Right.
paid things that you might get from the library or from your broker. Yeah.
I mentioned screening and stock ideas from October, not July, and using quarterly data to enhance your stock analysis. So all of these are available in the video learning library. And with that, I want to thank everyone for their time and attention. And thank you for being a wonderful host. And thank you to our really great backroom staff.
And thank you, Suzi, for a wonderful presentation.
I will always do presentations on the tools. I love it. So thank you all and good night.
Good night.